Hi everyone, this webinar on activity-based costing. Now it's going to be quick and only the super basics because I believe it's the super basics that will score you the most marks, whether you are in second year or third year, which this webinar is aimed at, or whether you're doing CTA. I see some CTA students in the webinar. It's always the basics that trips up students and cause them to fail a question. And as I know from experience, activity-based costing is one of the big problem areas. So I'm going to switch off my camera now. I'm Francois Steyn. I'm a chartered accountant. I've been lecturing for more than 10 years, especially management accounting. And I'm at Tabaldi now for the last 3 years. And we're doing these webinars to assist you during this lockdown period. And yeah, so let's get going. I'm just going to switch off my camera now to hopefully help with the slow internet. Because so if the internet is slow or you can't hear, pop it in the questions there on the right hand side. You'll see a question box there. I'll keep an eye on it if I remember. But if for some reason it bombs out, you can watch the recording later on. We'll mail the link to the recording to everyone that registered. Now, before I do, thanks, audio better without the video. So before I do any Mac topic, or when you start a new Mac topic, always make sure that you understand the problem or understand what this topic is about. So the what and the why. Why does a company use activity-based costing, and what problem does it solve? Before you go through the how is the steps, the calculations, the formula that you can memorize and do without understanding. But without the what and the why, the how is a very dangerous strategy to just memorize it. So activity-based costing, what is the problem it tries to address? Overheads. The overheads is our big problem. So whenever you see overheads in a question, or they say the company has a big proportion of its costs are overheads, or it's highly automated, or they use a lot of machinery, etc., then it's almost it's a hint that activity-based costing might come up or might be part of the solution. Now, before I continue, close to the end of the webinar, we're going to give away a free exam course. So any exam prep course for free. So if you listen, I'm going to ask a super easy question. The first person answering it will get a free exam course of their choice. So listen until the end, and also we'll give a discount code to all students. That's in the webinar. Now, overhead. What's the problem with overheads? Let's say we've got two products, A and B. What are the cost elements that goes into producing these products? It's always the same three cost elements. We've got direct material, direct labor, and overheads. So how are they different? Well, direct material and direct labor, they are direct costs. We can directly trace the costs to the different products. So material, for instance, we know exactly what amount of metal, for instance, or how many components do we use in A and in B. So it's easy to allocate or assign. And same with direct labor. We can keep a timesheet, and all direct labor costs can be easily assigned to product A or product B. The problem with overheads are that they are indirect costs. So we don't know exactly how much is used. And indirect costs can be direct or indirect material, like for instance glue. When we manufacture wooden products, for instance, the glue that we use, we cannot directly trace it to the different products, so we have to assign it on some other basis. So it's an overhead. Same for indirect labor. So the supervisor of the factory, we don't know exactly how much time and attention was spent on each product, so it's an indirect cost. So overheads are indirect costs. And what I like to see in my head when I see overheads is a bucket. This could also be a T account, and it will be a T account. If you understand T accounts, that's the best approach. But this bucket is my overhead buckets, or my overhead T account. Whenever I encounter indirect costs, that's part of the manufacturing process, I just throw it in this bucket to allocate at a later stage. So we fill up this bucket with overhead costs. And another way to see it is a blob. It's just a blob of costs, which we cannot trace directly to product A or product B. Now, how do we traditionally allocate overheads? We calculate that long word, predetermined overhead allocation rate. Remember that long thing? That is basically our budgeted overheads or budgeted fixed overheads over our normal capacity or budgeted units. Or it could be budgeted labor hours or budgeted machine hours or budgeted revenue. It could be anything, but it's a predetermined overhead allocation rate that we apply to all the products in the company. So how does this physically work? We're going to do an example next. We take the costs in this bucket and we divide it by our budgeted units. So this is our budgeted overheads divided by budgeted units, and we get a rate. And now we can assign this rate to product A and product B. So if this rate is per unit, each one will have the same overhead cost per unit. If it's a rate per labor hour, for instance, so we divided it by labor hours, then we'll assign it to A and B based on the amount of labor hours spent on A and B. So that's absorption costing. Remember absorption costing. So when you hear the words traditional method of overhead allocation, think of what you do in absorption costing. We had a free webinar on that, and there's a clip on YouTube, or that whole webinar is on YouTube as well. Okay, so there's nothing, that's why all these topics are integrated. So activity-based costing, when they talk about the traditional method of overhead allocation, it's taking all the overheads, this big blob of costs, and calculating one rate that applies to all the products in the company. Now, is this fair? Let's see. So in this blob, we've allocated some electricity cost because we can't allocate it directly to product A or product B. So that's part of this bucket of overheads. But we also threw in maintenance cost there because we don't know how much of the maintenance was attributable to A or B. And then there's depreciation on the factory machinery. So you can see we throw a lot of stuff in this overhead bucket because we don't know. We can't trace it directly to product A and B. They are indirect costs. Now, let's assume product A uses quite a lot of electricity to make. They use lots of power tools, hand power tools, and heating stuff up, etc. So electricity is largely driven by the number of units made by A, of A. And then maintenance again is mainly for one big machine, and the machine is sometimes used for A, but mostly to produce B. So B is largely responsible for the maintenance costs. So is it fair to allocate the electricity equally to A and B and the maintenance equally to A and B? And that is the problem with overheads. It's difficult to assign it on a fair basis, and activity-based costing is going to help solve that. So let's make some space. Now, following my bucket approach here, we're going to do something a little bit more accurate now, and that's activity-based costing. We're going to take all these different cost pools. You remember the words cost pool? You might have seen that in your activity-based costing notes. And we're going to create a bucket for each one. So we'll create one for electricity, one for maintenance, and one for depreciation. And you'll see in your activity-based costing, you'll usually get your total overheads broken down into different cost pools. You'll have your cost for electricity, maintenance, and depreciation, and the total will make up your total overheads. Now we're just going to take this big bucket of overheads and empty it into the different cost pool buckets. So electricity cost, maintenance cost, depreciation costs. And now the beautiful thing about this approach is we're going to do exactly the same we did in blue here. We're going to calculate a rate for electricity, a rate for maintenance, and a rate for depreciation. And then we're going to allocate each of those rates to A and B. So this will be more accurate. So electricity, for instance, we'll say what drives electricity costs? What is the cost driver? That's another key thing you need to know in activity-based costing. Well, we said electricity, they use a lot of power tools, and people use the power tools. So let's say direct labor is a cost driver. So the more they work on a product, the more they use power tools, so the more electricity cost goes up. So we'll say labor hours is the cost driver. And this will usually be fairly apparent in the question. They'll either tell you what the cost drivers are, or they'll give you a sentence or two explaining how that cost is incurred. For instance, direct laborers use the power tools and that causes electricity. So then you know direct labor hours are the cost drivers. In CTA, you might have to figure it out yourself, but it's usually fairly straightforward to figure out what the cost driver is. We want to know what causes the cost to be incurred. So maintenance, let's say that's machine hours. So the more they use that machine, the more maintenance is required. And depreciation, maybe we don't have a cost driver, so we can just use some arbitrary basis like the traditional method uses. So let's say units. So we're going to allocate it equally to all. So at least this will be more accurate. So now we can say, well, product A used 90% of the electricity cost or the labor hours. So we're going to allocate 90% of the electricity to product A and only 10% to product B. Maintenance, let's say machine B used 80% of the machine hours. So now 80% of the maintenance cost will be allocated to B and only 20% to A. So this will be much more accurate. The product that caused the cost to be incurred, that caused the cost to go up, will absorb that specific cost. So that's activity-based costing. Now let's do this whole mess that I drew on the slide as an example. So I'll try to post this afterwards if you want to practice it again. Yeah, I only prepared this fairly recently, so I didn't have time to somehow upload it somewhere. Now I'm going to try to take it slowly. The company manufactures two products, A and B. Product A is very labor intensive. So A is labor intensive and requires a lot of direct labor time, while product B, let's do that in a different color, is manufactured in an automated process using machines. So we can already see they are going to consume or cause our overheads to be incurred in different ways. The one uses a lot of machines, so any cost related to the machines will be caused by B more, and any costs that's caused by labor time will be as a result of product A. And then you'll always see some basis that they use for traditional overhead allocation. So traditionally, the fixed manufacturing overheads, that's our problem, are allocated to the products on the basis of labor hours. So an exam technique tip, when you read a question, when you see there's overheads involved, overheads, you can't do anything with overheads without the basis of allocation. So always when you do your case study, while you read your case study, make a note of the allocation base and write it down in the margin. So when you scan your margin, you can quickly find the allocation base. Here, it's labor hours. That's the traditional method. And then budgeted fixed manufacturing overheads are as follows. So we've got 850,000 Rand we need to allocate. That's our big bucket full of overheads. Now remember, for the traditional method, we're going to allocate the 850 to product A and B using one rate, the predetermined overhead allocation rate we've seen in absorption costing. But this fixed manufacturing overheads cost is made up of 300,000 electricity and 550,000 cleaning. So maybe it's big machines that uses a lot of chemicals and stuff, and every time they start up the machine again, they have to clean it out completely before they can use the machines again. So these are the only two for this example. Now let's read further. Electricity. So when we see this and we're going to do ABC, you need to find cost drivers. So look for the cost drivers as you read through the case study. Electricity is incurred by using power tools that are operated by direct laborers. So that's going to be our cost driver. If they don't give power tool hours, but they give labor hours, then that's the only thing we can use. And then while cleaning needs to happen each time a new batch is started. So number of batches will be our cost driver. The more batches we have to start again, the more cleaning costs will be incurred. And then they give us a bunch of other information. Now remember, and this is a picture that I have so clearly in my head, and you need to as well paint these pictures for Mac in general. When you calculate cost per unit, always think of the three cost elements: direct material, direct labor, and then everything else, the overheads. So I always think, where are the cost elements, those three things? So direct material, 150 Rand per unit for A, 180 for B. Direct labor, they gave us labor hours per unit, but they gave us the cost per labor hour. So we can calculate the direct labor cost. So that's just 80 Rand times 10 hours is 180 for A, and then 80 times 2 is 160 for B. But we'll get to that. Oh, wait, that's 800 for A, 160 for B. Excuse me. And then annual production, that's our demand or the number of units they're going to produce. And then units per batch. And then selling price per unit. Okay, so I didn't write down the required. So what do we want? We want the total. Okay, wait. Let's say gross profit per unit using the traditional method of overhead allocation and the activity-based costing. So that's usually what they ask in a question, in an exam. They ask you to calculate, and okay, let's do this. This is just exam technique. Please bear with me. I'm going to give you tips now for what to look out for in a test. What type of questions can we get for ABC? They can ask you for profit per unit using traditional method or ABC, or both. Usually they ask you both. So what is profit per unit? It's our selling price less direct costs less overheads. And that will give us our gross profit per unit. So you have to do all of this. Students often leave out the selling price and the direct costs because they're so used to wanting to calculate the overhead costs. So that's the biggest one they can ask, profit per unit. And if they ask per unit, do it per unit. If they ask in total, you have to show it in total for each product. So that's a one. Second, it's a little bit easier or a little bit less, is total cost per unit. So what is total cost per unit? It's our direct costs or direct material, direct labor, and overheads to get to our total cost per unit. So don't forget about the direct costs. Those are free marks, and they always give those. And then the last one, the easier one, and the one they usually ask for ABC because it just saves time and there's less duplication, is the overhead cost per unit. So what is the overhead cost per unit? That's just the overhead part in both of the previous types of questions. So there you don't have to show the selling price, you don't have to show the direct cost. It's only the overhead cost per unit. So just read carefully, because if you misread this, you can waste a lot of time doing the wrong thing. But you're going to always have to do the overhead cost per unit and maybe add direct cost and then maybe even add selling price to get to profit per unit. So in this question, I want us to do the profit per unit. So we know we're going to start with the selling price, and that's given, so it's 3 marks. They gave us the direct material, that's 3 marks. You won't earn much for it, but it's 3 marks. And then your direct labor is super easy to calculate. It's rate times hours. So again, it's 3 marks. So you can see if they ask you for profit per unit, you can score 2 or 3 or even a little bit more in second year, 3 marks by just showing selling price less direct costs. And then the overhead costs, remember, if they ask profit per unit, what do you give them? You can't give selling price less variable cost. That's not profit per unit. You have to finish the question. So if you run out of time, guess an overhead cost per unit and write down a final answer, and then you've given them profit per unit. But because you've shown your calculations and your workings and your formulas, you get some marks for the selling price and the direct costs. So always finish the question. If they ask for profit per unit, you can't give a bunch of calculations without showing a profit per unit value. So remember to guess stuff if you run out of time, just to finish to answer the question. So those are 3 marks. The big issue we can see here is the overhead cost per unit. That's where most of the marks are going to lie. Now, we're going to do this using the traditional method first, and then the ADC method. So traditional method, I often see students not understanding this, or somehow they went through second year and third year, and even in CTA, they still don't understand what is meant by a traditional method. And once they realize what it is, it's so easy. So the traditional method is where we take the total overheads, our budgeted overheads divided by normal capacity to calculate our predetermined overhead allocation rate, and we're going to allocate that to the products. So our allocation basis is important, labor hours. So let's calculate the rate. That's the first step. I did it here in a calculation at the bottom. Okay, let's first look at this layout. So like I said, 3 marks, direct material, 3 marks, direct labor, 3 marks, and we show our calculation. It's our hours per unit multiplied by the 80 Rand per unit, 3 marks. Fixed manufacturing overheads, we're going to have to calculate this. So this is what we're going to do next. And that will give us our total cost per unit. Selling price, 3 marks. Deduct overhead total cost from selling price to get profit per unit. Question answered. So you can score quite a lot of marks without doing the fixed manufacturing overheads. And if you guess a value there, at least you only lose 2 or 3 marks. Now let's do that fixed overhead calculation. What is the predetermined overhead allocation rate when we do absorption costing? Budgeted overheads, so that was given, 850,000. That's the total bucket of overheads. Divided by, what's the basis? Labor hours was our traditional basis of allocation. How many total labor hours do we budget for? If they don't give us the total, we're going to have to calculate it. So let's do that in a different color. Now, how do we calculate the total labor hours? We know it's 10 hours for a unit of A and 2 hours for a unit of B. So am I right in saying that the total labor hours are 12 labor hours? Nope, we can't do that. That's only if we produce 1 unit of A and 1 unit of B. And I see this often. You can't add the 2 because we produce 300 units of A and 200 units of B. So we have to take the number of units into account. So that's what we did here at the bottom. For A, it's 300 units times 10 hours per unit. So that's 3,000 hours. For B, 200 units times 2 hours per unit, that's 400 hours. So if we add the 2, we've got 3,400 hours in total. So what is our predetermined overhead allocation rate? 850,000 divided by 3,400 hours, and that will give us 250 Rand per labor hour. Now we can show or put that into our total cost per unit. So product A uses 10 labor hours, and the rate is 250 Rand per hour. And we can't just show this, we have to reference the workings. So we'll say W1 and then a heading workings, W1, and that shows where we got that 250 from. And that's our 2,500 Rand fixed manufacturing overheads allocated to A. B is 2 hours times 50, 250, so that's where the 500 came from. And now we can calculate total cost per unit, deducted from selling price per unit to get gross profit per unit. Okay, so product A makes a loss of 450 Rand, and product B makes a profit of 1,160 Rand. So which product should we focus on in our marketing? Obviously product B. We can't punt product A or push the sales of product A, because every time we sell a product A, we make a loss of 450 Rand. So we should really discontinue product A. Or we should increase the selling price if possible, because we can't charge 3,000 Rand if we're spending 3,450 Rand to make product A. That doesn't make sense. So for decision making, we know we need accurate costs per unit. We can't make decisions like these, discontinuing a product, marketing one product instead of the other, setting a selling price. These are decisions we need to make as management accountants. And we can't make those decisions if this total cost per unit is inaccurate. So let's look at ABC. ABC is going to be more accurate if we can find accurate cost drivers for our product. So let's assume it's, they said, okay, electricity is driven by direct labor hours. So if that relationship is a direct relationship, there is a close correlation between labor hours and electricity, then it's more accurate. And again, cleaning costs each time a batch is started. If there's a close relationship between the number of batches and the cleaning costs, then it is more accurate. So let's see what happens if we use activity-based costing. So what I want to do now is somehow get this close so that I don't have to page all over the place. So let's see. Okay, so activity-based costing, and I've got a format for this that I always use. Sometimes there's a quicker way to do it, and you can do it any way you like. If they ask you for profit per unit, you calculate profit per unit. It doesn't matter how you do it, but show your calculations. Make it easy for the examiner to mark and reference all your working. Now, my way, I always do it. It's just because I practiced it a lot, it became quicker and quicker and quicker. But it's easy to understand, it's easy to see what I did, and it's easy to mark. I always draw this table. So forget about this bottom bit for now. That's the direct cost and the selling price. That's the free marks. You can put that, remember to put that in, because direct material, direct labor, selling price, all of that was given. So don't leave it out. But we're going to focus on this part, calculating the overhead cost per unit. So I will always have these columns. Now it looks like quite a lot, but it's not really. So we start with the cost pools. That's our separate buckets. So we'll have a bucket for electricity and a bucket for cleaning. And remember, we empty the total bucket, the 850,000, we have to empty. So some of it goes into the electricity cost pool, some of it goes into the cleaning cost pool. So the next one is the cost, and that's always given. 300,000 for electricity, 550,000 for cleaning. So we've emptied the main overhead bucket, so there's nothing that we don't allocate, and we're going to now calculate two separate rates, one for electricity, one for cleaning. Next step is to find out what causes this cost to be incurred. What is the cost driver? So we said labor hours is the cost driver for electricity because we use power tools and that it uses electricity. And the number of batches drives up the cleaning costs. Every time we start a new batch, we have to clean the whole thing, and it takes 2 days, and it's chemicals, and it's time, and whatever. So that's the next step. So now we have cost drivers. Next thing is we need to calculate the rate. How much does it cost us per labor hour in terms of electricity, and how much cleaning cost do we spend per batch? Now, in order to calculate the rate, we need to divide the cost by something, by some activity level. So we divide it by the cost driver. Electricity cost divided by labor hours will give us a rate per labor hour. Cleaning costs divided by number of batches will give us the rate per batch. So it's as simple as that. You need to understand. Don't memorize this if you don't understand what we're doing. We are calculating a rate for each of these smaller cost pool buckets to allocate. Same as what we did for the traditional method. We just have 2 rates now. Now, something I see often is students calculate one rate for product A and one rate for product B, different rates. You can't do that. You can't calculate. There's one rate for every bucket. This is something you have to memorize. And I always stand on my chair when I lectured face-to-face when I said this. You calculate one rate for each cost pool, one rate for electricity bucket, one rate for the cleaning bucket. If you have more than one rate per cost pool, then you're wrong. Then you're on the wrong track. Okay, so how do we calculate the activity level? Now, we've actually already done the labor hours. When we did the traditional method, we said units of A times 10 hours per unit is 3,000. Units of B times 2 hours per unit is labor hours for B. So 3,000 plus 400 is 3,400. That's our total labor hours for the whole period. So that's what we put in there. Now, if you didn't do the calculation before, you have to show the calculation now. So put there working one or whatever. If you've already done the calculation for the traditional method, reference to that working. Like I did working 1, so I'll just put a W1 next to it. What about the batches? Now, this is a bit of a tricky one. I get this question often. How do you calculate the number of batches? Because they gave us units per batch, 30 for A. So every time we make a batch of A, we'd make 30 units. And then 5 units in a batch of B. Now, what is the total number of batches? Is it 30 plus 5? 35? No. It's not 35. Remember, we're looking for number of batches. These are units. 30 plus 5 units. It's not the number of batches. We first need to calculate how many batches of A did we make for the year and how many batches of B. So how do we do that? We are going to make 300 units of A, and there's 30 units in a batch. So if we divide 300 by 30, we get 10 batches. So throughout the period, we're going to make 10 batches of product A. So 10 times we're going to start up the machine and incur cleaning costs. What about B? 200 units divided by 5 units per batch, small batches. That's going to give us 40 batches. So we're going to start up the machine 40 times to make 5 units each to get to our total units of 200. So now we have our total batches of 50 for the year. 50 times we're going to start up this machine to make our 300 units of A and 200 units of B. So here I did my working. So I'm just going to say reference. I'm going to say working 2. Obviously, I'm going to do this under the heading workings. And we're going to reference this working 2. And that's where we got the 50 from. So remember, if you're working in units, calculate units. If you're working in labor hours, calculate labor hours. If you're working in batches, number of batches, you have to calculate how many batches, not how many units per batch, number of batches. So there's no memorizing any formulas. You have to think of what unit you're busy working with. Now it's easy. Now we can do the rate calculation. So let's label this column A, B, C, D. So our rate, we need to show a working somehow. So let's just say A divided by C. And that's enough to show a working. Now everyone that marks this will see this value comes from dividing A by C. So it's a neat way to show your workings without wasting too much time. And then the same for cleaning, 550,000 divided by 50, 11,000 rands per batch. So this is 88 rand per labor hour, 11,000 rand per batch. And now we can allocate it. So product A used 3,000 labor hours, which we've calculated already. That's the 300 units times 10 hours per unit. And if we multiply that by the rate, we get the cost. So you could possibly say just rate times usage, because we show usage as a heading. So that shows the examiner. It's pretty clear what we did, but that just shows your working, what you did. And then for B, that's the 400 labor hours, 2 labor hours per unit times 200 units, multiplied by the same rate. You can see it's one rate for the electricity bucket, 35,000. And then the same for batches. Cost is on 10 batches times 50. So, times 11,000. Rate times usage, and the 110,000 rand. And B is 40 batches times the rate per batch, 440. So now we've got our total overheads if we add the two. And if you add the overheads, you should get back to 850,000. Otherwise, you've left something out. Okay, so now we've got our total overheads. If they asked us to calculate overhead cost per unit, remember to give it to them in units. So you divide it by the number of units to get overhead cost per unit. So just show your working, and that would be the final answer then. If they asked us for total cost per unit, you had to add direct material and direct labor. So then this would be our final answer, total cost per unit. If they asked us to calculate profit per unit, remember to deduct from the selling price, and that will give us profit per unit. Okay, so now let's compare this to our traditional method of overhead allocation. Remember, product A gave us a loss of 450 Rand per unit. And B gave us a big profit of 1,160 Rand per unit. So we wanted to focus on B and even discontinue product A. But now, allocating the products more fairly, we see it's product A that's actually making a profit, and B is making a big loss. Why is this? Well, one of the big reasons here is if you look at the big cost, cleaning, the bulk of the cleaning cost, 80%, was as a result of product B. So that pushed up the overhead cost per unit for B significantly. Why is the cost so high? It's because they produce such small batches. They only produce 5 units every time they have to spend 11,000 Rand on cleaning. Whereas A, they produce 30 units, 6 times as many units every time they spend 11,000 on cleaning. So it's much more efficient. So what they could do is raise the selling price. But what's the problem with that? If our competitors charge the same price, then we can't just raise the price. Can we reduce the cost? Maybe we can produce batches of 30 for product B as well. That will save quite a lot of cleaning costs and bring the cost of product B down. So maybe, why would a company produce such small batches if they know this? Think of, I love to use this example. Think of, a company produce big pens. They produce blue pens and we produce red pens. The plastic in the pens are exactly the same, direct material, direct labor is the same, but our overheads, what about the overheads? So let's say the demand for blue pens is 10 million per year and the demand for red pens is only 20,000 because only teachers and lecturers use red pens, but all the students and learners use blue pens. So our batches of blue pens might be 10,000 units per batch, but because we don't need as many red pens, we only make 500 units per batch. And this will actually cause pens that look identical to cost different amounts to make. Because we can't make a batch of 10,000 red pens because we're going to sit with a lot of stock then because we're only going to make the red pens twice and we're going to sell it throughout the year. So it might get old or whatever. But you get the idea. Exactly the same product, they look the same, they feel the same, they should cost the same, but because of the way the overheads are incurred, they don't cost the same. So, and we can't just charge more for the red pens now. We have to charge the same. The customers are not going to understand it. So, and in this case, the blue pens will subsidize the red pens. But this just shows you the problem with overheads and how it can affect our decisions that we make. Now, before we get to the end of this webinar, I just want to give you a quick question. I didn't prepare for a question. So let's just say the first person who can type in the question. So get ready. On the right-hand side, there's a question tab, and you can type in a question. So get yourself ready to type in a question, or in your question section, you're going to type in the answer. Let's say when we calculate the predetermined overhead allocation rate, we are going to divide budgeted costs by what? So budgeted costs divided by what will give us the predetermined overhead allocation rate. Let's say the allocation base is units. What units do we use? Okay, I've got an answer. It's not quite there yet. So, okay, let me say this. Is budgeted units or actual units? When we calculate the predetermined overhead allocation rate, budgeted units or actual units? Okay, we've got a correct answer. I'll contact you directly. Janina Prinsloo, thank you for the quick answer. And now the promo code that's valid until the end of May is exams. Sorry, it's exams with an S at the end. Exams 10. If you use the promo code exams 10 until the end of May, you can buy any of our exam courses or our full courses that includes the exam prep course and get a 10% discount. And it's already been discounted, the full courses, due to being close to the exams. But there's still quite a lot of time. Some exams you have more than a month, so a full course will actually help quite a lot still. So anyways, thank you for joining us, and please look out for the recording of this, and Yvonne will do another free webinar on Thursday. I'm not sure what it's going to be about. It's probably going to be some financial accounting topic. And if there's any other topics you want covered next week, please email us at queries@thebaldi.com. So I'll just put in the email address there again. So this is the email address. And next week, we're going to give away another free exam course. So please join us. And it's only the live one, obviously not in the recordings. Thanks again for joining us. It was fun chatting to real people. And good luck with the rest of your studies. And yeah, we'll chat again.